Welcome back, everybody. Sive is here with the ForexPeaceArmy.com. Today we consider 2 points in this video. First is a mess around the Jerome Powell resigning. What does it mean for the market? And especially what's actually very interesting with the practical application. So what does it mean for short-term trading? And second, we'll try to find some reasonable solution to the current situation, create some trading plan, what information we could get and extract from the recent mess in the market, and what does it tell us about the next direction. So on the daily chart, we do not have lots of changes. The thing that we talked about is a possible bullish grabber and has not been formed yet, but with the perspective that we see currently, it still could be formed on this week. MACD line still stands very close, and with this a bit slightly deeper action, market easily could touch it. So on the daily chart, conclusion is the same. We're still watching what is going on here, and keep an eye on the possible appearing of the bullish grabber. Trend remains bullish, as you can see here on the gold. On the 4-hour time frame chart, we could make the major conclusion. First, about Jerome Powell rumors on resigning. That's actually, you can see that the first jump and has happened here was particular on these rumors. Later, Donald Trump said that he has no intention to fire Jerome Powell until the end of his term, and actually leads market back. That's all the actual motion around the possible rate change in the Fed policy. As you understand, the firing on the Jerome Powell means soft and more dovish policy. His follower probably will be execute what Donald Trump will tell. But when the rumors have not been confirmed, everything returns back to its own way with the same expectations of the stubborn policy from the Fed and no rate cut in July. That's what we've got from this moment. From the technical point of view, it looks a bit bearish. Why? Because market was not able to utilize this possible spike and boost above this area. So it hasn't turned it in a straightforward upward continuation. The only bearish wash and rinse has happened. Market grabbed stops above this top and collapsed. This is potentially signs of weakness, and it means that we could get here a deeper retracement. Not necessarily it will be a really straight downside drop here, right back down, but still market could move slightly lower. This is first moment based on this particular candle. Next is more evident signs. We have the grabbers all the way down, so we could count it here 2 or 3 grabbers in a row. All of them suggest taking out of these lows. It means, but in some way, gold should drop and taken out of these lows. If you take a look at the same pattern that we just discussed on the euro currency, you have it on the gold as well. So it might be downside butterfly. And from that standpoint of view, we return back to the idea of the retracement to the 33 area. We have here 127 extension potential butterfly around 33.04. 1618 will be 32.84, and between the majors FIB support 32.95. So the area around 33, 32.90 is probably will be the next and nearest standing destination point for the gold. At least until either grabbers will fail or market will drop below the lows or any other bullish pattern will be formed. In the current circumstances, I wouldn't consider yet taking any new long positions. So that's all for now. Hopefully we'll get you some ideas for your trading, because in this mess it's relatively difficult to identify something and make the reasonable decision. So let's see what the progress we'll get in today's session.